Good morning, everybody. Welcome to Investing Bros. It is Monday, June 5th.
So looking today, guys, we are looking here at the big one today, ISM Services PMI. I'll be honest, I'm not even really quite sure what this actually measures. It's slightly higher, blah, blah, blah. It's a rebound to export orders. Okay, so it's export orders and supplier delivery services. Yeah, nothing major on that front today. But this week, we do have the balance of trade coming in. And we do have initial jobless claims coming in on Thursday. And that's it, guys. This is it. This is the week. Look at Trueflation today, guys. Looking at 2.85%, down another 0.02% there. So still well under 2% of what the U.S. government's reporting on the inflation rate. We've got $14.4 million in liquidation. Somebody made bad choices and gave $14.4 million to somebody with better choices there yesterday. 9.5 of those million of those being longs, 4.8 million of those being shorts. Let's look at ETH, 9.2 million of liquidations in the past 24 hours on Ethereum. Got the others here, which means that it wasn't a lot of other things. Look, XRP's on the list, and I haven't seen that. Wow, Luna Classic is on here with 1.9 million in liquidation. So Luna C making some moves there yesterday, guys. I don't know why. Yeah, Binance still $23.6 million in liquidations total. So that's what we're looking at there.
Let's take a look at what we're seeing with the FOMC. We are predicting with almost 76% chance that we're going to go ahead and pause for this month. You guys know this was big because here, literally about a week ago, it was almost 80% saying we were going to raise another 25 basis points. But of course, all the debt ceiling stuff came out. The update we do have here, and again, it's not with significant conviction, but December, we're actually projecting right now to go ahead and stay paused. Take a look at what's happening over on Bitcoin. I got a lot of chaos up on my screen this morning, down on the 4-hour chart. You can see we're not really far off. We're down about 6% from where we were about a week ago, back when we were testing this red descending level of resistance on our trading channel, this falling trading channel. But we're back down here. There's just a lot of support happening down here, though. Right here, we have a very, very high order block here. So we got support from an order block sitting down here all the way at 26,400 or so. And then you pull up our fixed range volume profile I just took down. Let's go back to the opening of quarter two back on April 1st. You're going to see we're sitting right here. Both the point of control and the value area low are right in the same region. This is a nice little zone. Strong support we have, despite the fact that we're down 6% on the week for Bitcoin, everybody. We're sitting on a lot of support. In fact, we're going to talk about this here in just a little bit in the news section. There's some on-chain data showing major bullish signs. Like every single time we see this movement on-chain data, it's usually followed by bullish price action. So we're looking at the charts. We're looking at ourselves get into this stronger support level that we see not only from our fixed range volume profile, but also from our order blocks here with Chart Prime. We're seeing the oscillators come in as well. Let's take a look at our Fibonacci levels going back over here from this bottom to the top right here. And you're going to see we're kind of bouncing right between the golden pocket and our platinum pocket. Would not be surprised, guys, you see a drop down to this 0.786 right here on this order block, right here at 26,400. And guess what? You're going to see the bears coming out of the woodwork. You're going to see them saying, oh, here we go. Bitcoin's going down. Look at the volatility that has happened ever since we came up here and hit 31. This was the top of this falling channel. The bears got really, really loud right here. And then the bulls got really, really loud. And the bears are loud. And then the bulls are loud. And you're seeing the volatility starting to constrict. This is one of the new cool tools that Chart Prime has. It tells you how high of a rating the consolidation is. And when the consolidation is sitting high, that's a good sign that a breakout is coming soon. On the daily chart, we're seeing an 8. We're seeing 8s almost everywhere across these top ranges, which means a breakout is coming soon. Cardano continues to hold its own support up here. We're in a little bit of a rising trading channel that should have another wave hit Cardano back up towards 50 cents here. We've been talking about that since last week, keeping our eyes there. Would not be surprised again to see Bitcoin shoot up to 36,000, maybe make a push towards 42, see Cardano shoot up towards 50 cents, see Ethereum shoot up maybe towards that 2,400, 2,500 range. But we're still sitting with nice, strong support, not only for Bitcoin, but for Cardano as well.
Looking right here, you can see Ethereum on the 4-hour, lots of breaker blocks sitting below us. Guys, watch for this dynamic sidekick. Yes, this is an indicator coming soon. I promise you it's coming. It's going to be integrated into the Pro Suite as a turn on, turn off, but you can see here, getting a lot of confluence right here with this breaker block. So I do think that even if we lose this breaker block, we're probably going to come down, catch this and this breaker block for the next level of support. And that's going to be coming in at about about 1850. We are currently in a falling wedge right now. You can see that we got a confirmed breakout. That's that red X right there. And this is the retest, but we're getting a lot of rejection right here on the value area high. This is the value area high of this fixed range volume profile over here. And watching this right now with that much rejection, going to be interesting to see how we break out of that. However, inside of this wedge, we also have an inverse head and shoulders pattern. If we take this line here, measure this from the blue line, the neckline here to the head of this pattern. Let's go ahead and grab this and pull it over here, see what it's going to look like. Yeah, that's going to be putting us at about $2,000, 2015, somewhere around there. So it does look like the money flow and the trend fusion is showing more downside coming. Again, I do think that there's some good support below us, especially down here at the point of control. That's this dash red line right here. That's going to be at about 1815. So not looking too worried with what we have below us, but the oscillator's definitely showing downside has occurred. I do expect a little bit of a pull down, but I do think that 1850 range is going to be key. And if not the 1850 range, then watch for 1815 for your support zones.
Exchange inflows for Bitcoin, Ethereum, and major stablecoins decline at a significant pace. According to the data, exchange inflows for major assets have been hovering at an extremely quiet $1.84 billion. Notably, this is about $10.36 billion lower than the peak inflow experienced across May 2021 sell-off. So here's a chart here, right here, guys. You guys can see this orange line is the inflows coming in where exchanges have a lot of money. You guys are going to see a lot of these big peaks, and I'm sure we would see it if we went back in time as well. But notice it's not at the very tops. It's right after tops have big dips. This, of course, was back when Elon Musk announced that Tesla would be selling their Bitcoin. This, of course, right here, I believe this is the Terra Luna collapse because it was Luna then Celsius, correct? I think, yeah, Luna then Celsius. So this is where Terra Luna had its whole shabacle. Notice it didn't hit the peak, but what happened was a lot of money got put onto exchanges so them to then liquidate it out. We're sitting extremely low right now. You also see some peaks here. It's about to rally here, but we're seeing extremely low. These lows actually usually mark times where the price is going to increase. The drawdown represents about 85% decline from the peak about 2 years ago. Analysts anticipate this to be largely driven by the recent capitulation and exit liquidity events. Notably, large inflows represent bearish sentiment, while declining values signify the opposite. I kind of said that here just a second ago, but I wanted to highlight it anyway. This has to do with stable coins, and there is one Tether. This kind of teal line, it is increasing. The supply of Tether is increasing. Now, one thing you might see that though, Tether being one of the largest stable coins, probably the largest stable coin right now, according to what does CoinMarketCap say? I don't even know which one is technically ranked above the others. You do sometimes see that stablecoin value go a little bit up because they want to be buying here very soon, but every other stablecoin is starting to move to the downside. In fact, the aggregated top 5 stablecoin supply is kind of getting low here. At the same time, another set of data derived from exchange on-chain flows reveals that there has been considerably weaker demand since April. Glassnode's data suggests that major shifts underway in stablecoins, with the USDT supply at new all-time highs, while USDC and BUSD fell to multi-year lows. Notably, considering that stablecoins are non-interest bearing and regulatory pressures in the US is building, it suggests US capital is now less active in digital assets. Let's take a look down here. Also, we had talked about Ethereum. This is the Ethereum chart. Looking at Ethereum supply over, it is sitting extremely low. This is exchange balance in blue. This is the price in USD here. But last thing, notably, the decline in asset supply on exchanges is generally seen as a bullish sign for several reasons. One of the key reasons behind it is implied to be that there are fewer coins available on exchanges to be sold. This limited availability can create a supply-demand imbalance, potentially driving up the prices in assets. BlackRock CEO Larry Fink says US is jeopardizing the dollar's reserve currency status. I guess the one thing I wanted to highlight, he believes the Fed is not finished. Inflation is too strong, too sticky. He said there are pockets of problems such as commercial real estate sector. He believes that there will be 2 more. I don't know where I had it highlighted, but he believes there will be 2 more interest rate hikes coming for the US dollar. Another bull we have here is Arthur Hayes, and he expects the Bitcoin next bull market to start by October. In terms of US federal government, the pundit projected that politicians would continue to prioritize spending. At the same time, the government's borrowing would persist, resulting in trillions of dollars of debt being accumulated every single year. He says, I believe the real fireworks and the real Bitcoin bull market will begin in the late third and early fourth quarter of this year. Between now and then, chill. Take a vacation, enjoy nature and the company of your friends and family, because come this fall, you better be strapped in to your trading spaceship. It's ready for liftoff. I expect Bitcoin will remain resilient at this level. I do not anticipate a retest of 20,000 or anything close to it. Listen, Arthur Hayes, love him.
Wow, you made it to the end of the video. Great job. Now, if you want more content like this, whether it be TA on Bitcoin and Ethereum or altcoins, or you just want to stay up to date on the latest and greatest news in crypto, then stay tuned and tune in to our 9 a.m. live show every single weekday morning. It's 9 a.m. Eastern Standard Time. And when you tune in live, use the keyword grip strength in the chat, and you'll get a special shout out from anyone who's paying attention to the chat. Love to see you there.